All right, welcome back to Market Day Report. I'm Scott Shelley, having some fun here in Nashville. This is Market Day Report, still is. Let's take a look at the markets because it's got that in the name, right? What are the markets doing here today? Well, they want the front month. That's what's going on. That's the general theme. We'll let our guest analyst tell us what's going on with that. But we've got a 775.5 print in July corn. That's up 11. But if you go out to say Dees, the new crop, it's only up 1.25. So these spreads are moving on us, folks. Even the fact that we had the gold roll going on. 719 is last in that Dees contract. That's up 1.25 in corn. How about soybeans? Let's talk about those for a second here. They're taking off. 32.25 cents higher in the fronts. That's July. 17.72.25. That's some good going, man. Making a run at 18 bucks. Wow. 18.75 cents higher in August. 16.81.5. And then as we go out the defers, we kind of lose some ground here, but 10.5 cents higher in Sep. So they're really coming for at the monies, as we would say. How about wheat? That Chicago wheat market is down basically 21 cents across the board. July's off 20.25 cents to 10.54.5. But we lose between 21 and 24 cents as you go out the deferreds. March is off 22.25 cents to 10.90 for example. How about hard red wheat in Kansas City? That's off 16.25 cents in the front. That's the July. 11.38 is last. If you go out the deferreds, we lose between 16 and 20 cents. March is off 20.25 cents to 11.58.5. Spring wheat, and this is Minneapolis. Minneapolis is a nice town. I used to live there. July is down 17 cents to 12.17.5. And March is off 13.25 cents to 12.21.75 to give you an idea about what the curve or the deferreds are doing. We're not as low in the backs as we are in the fronts. Okay, cotton. That's an interesting one as well. Kind of quiet so far today, but up 140 points in that July to 142.02. And the new crop Dees is up 98 points to 123.52. And that is my segue into our next guest analyst. He's with Zaner Ag Hedge in Chicago. It's Ted Seifried. Ted, thanks for showing up on the show here today. What are your thoughts? I mean, we started off, they kind of came for the July in both corn and beans right away. It looks they'll be holding in there, but what are your thoughts?
Wow, Scott. We are gunning for all-time highs in soybean. That's the feel of today. You know, it's funny how we kind of forget the old crop tight situation that we have in soybeans. And then it takes something like export sales, where you have a fairly significant size week of export sales for old crop soybeans. And then we kind of look at each other and say, oh boy, we might run out of soybeans this year. You know, that story's always been there. But, you know, I guess it takes the proof in the pudding, which is these export sales, you know, going out the door. And we get excited about it. And today is defined by what's happening in the cash market. Today is defined by old crop, new crop spreading. Right. And the bull spreads are rampant, you know. So cash market's fairly tight. For corn as well, we're hearing a lot of improvement in basis this week, even though flat prices improved as well. So, you know, end users just want the cash right now. We're worried a little bit about what the heat coming in, as we looked at weather here just a moment ago. We're worried about what that heat's going to do with the dryness, how long that's going to stick around. That adds concern about the upcoming crop. But if we're concerned about the new crop, then the market's job is to take as many of the old crop bushels into new crop to buffer whatever sort of production issues we might have. So all the way around, Scott, bull spreading across the board for corn and beans. That's being reflected by what's happening in the cash market. And it's really indicative of more high prices to come. It's a really rather bullish thing that you've got going on, especially when you put that together with a pretty massive breakout on a chart in soybeans. It feels pretty obvious that we're going to go test those all-time record highs in soybeans. And then the question is, you know, where do we go from there? So I don't know. Wheat's the different story. And again, talking about the cash market, we've got harvest pressure happening at the moment. So that's keeping wheat under wraps by just a little bit. But really, Scott, I think once we get about 40% through the harvest in winter wheat, that's when that harvest pressure really subsides. Because in a short crop, the harvest pressure falls away fairly early. We sell what we don't have priced pretty quickly. And then after that, we deliver what's already been sold, or we put things in storage. I just think it's going to be short-lived on the cash pressure side for the wheat.
Yeah, it just looks like we're going to go away here real quick, but I would say this looks like the basis is on fire, and they're just trying to pull these gambling bushels out of these guys' hands real here in the short term, because they're holding on, looking for higher prices, and they're trying to give them a price that'll take it away. But a good little battle shaping up there, but if you're a producer, you'd like to see it. All right, we're going to go away, pay some bills, and we'll be right back. We'll talk with Ted Seifried about the livestock market after this. All right. Thanks for coming back. The Market Day Report. I am the cow guy. The cow guy wants to take a look at these live cattle prices. That just is a good segue into seeing what we've got going on up there. Let's take a look at Chicago live cattle. That's going to be, well, June's sharply unchanged. That's 136.82, but that's June. Let's look at, say, August. That's up 12 cents to 137.65, and 30 cents higher behind it with October to 143.05. But we can safely say that this is a pretty quiet market. Even October's only got a 90-cent range. We've only got, say, about a 50-cent range in June, so that's quiet. Live cattle, quiet. The front's a little bit higher, but June's the one that's unchanged. August is up 15 cents now, so not a lot happening over there. Moving right along to the feeders, not a lot happening here either, really. August is up 50 cents. 176.15 is last. SEP is up double nickels, 55, and to 177.80. All right, so not bad going there. You have to go out the deferreds to find a little bit of a loss. 1 tick loss in Nove and 20 cents loss in Jan, so no big deal out there. All right, lean hogs, real quick. Down $1.50 in June, 106.35, and we're down $3, 3.05 in August to 102.85. All right, we got about 45 seconds. Ted, what do you think about livestock?
First of all, Scott, you really show your true colors with that double nickels reference as a floor trader back in the day, Chicago Mercantile Exchange, where you and I used to see each other quite often. Yeah, it's really impressive that the feeder cattle are holding on to strength despite corn's run this week. Corn has had a really nice run, but also feeder cattle have had a really nice run this week, and live cattle too. Everybody has been doubting our domestic demand because of high-priced crude oil and things like that, but it doesn't feel like that's there. Weights are light up front, so if we are going to have demand for beef right now, well, then I think prices have to go higher because the packers' margins are there. Cash, I think, should go higher as well. The big disappointment today is what's happening in the hogs.
Right.
We tried to bounce back from the sell-off yesterday. We weren't really able to do that, and now some more pressure. And it looks like it may want to go test lows. I fundamentally don't think we should, but chart doesn't look great here today.
I agree. Trade's very heavy. We had a guy on earlier that said that rumors of importing some pork. Ooh, so anyway, all right. Thanks for that very much, Ted Seifried, Zaner Ag Hedge. Hope you feel better. Have fun traveling out to I think Des Moines today. Is that where you're going? All right, that's good stuff. We're going to bring it back here to Nashville, and we'll throw it back to Janet.